Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Sarah Wolak. The FHFA's Loan Level Price Adjustment Plan is the agency's latest attempt to help more people buy homes. But some industry experts think the new fee structure will only create more problems. They tell our own Mike Savino why.
The FHFA has put off plans for loan level price adjustments, but some in the industry say the agency should scrap plans altogether.
Better credit quality borrowers are going to get increases in order to subsidize the fee reductions for lesser credit quality borrowers.
The FHFA declined to talk with us for this story, but a spokesperson for Fannie Mae says the adjustments are meant to help homebuyers with low income or troubled credit. We partially offset these price reductions with increasing pricing for cash-out refinance loans, second home loans, and high-balance loans for higher-income borrowers, the spokesperson says.
It's going to mean a lot more affordability, so you could use that as a buy-down, essentially get a lower rate, maybe 0.25% lower.
Originators acknowledge that this could help some borrowers, but they also say that the fee structure imposes a 40% debt-to-income cap.
It's going to take a lot of those borrowers who they're trying to help and push them out because lower income borrowers tend to have higher debt-to-income ratios.
They also say there's better ways for the government to improve access to affordable housing, including providing incentives for builders to construct more low-cost homes.
If I build a $200,000 house and I'm making 10%, and I build a $400,000 house and I'm making 10%, I can choose to make $20,000 or $40,000, and it's really not that much more work.
Or charging a basis point to all buyers to fund programs, not a fee structure that treats borrowers differently.
And you'll have a fund to subsidize first-time home buyers if in lower income census tracts.
You can read more about the FHFA's loan level price adjustments in Mortgage Banker magazine, available now at mortgagebankermag.com. Reporting for The Interest, I'm Mike Savino.
Thanks, Mike. Mortgage industry groups are also raising red flags about the CFPB's plans for a registry of non-bank contracts. The agency wants more oversight of so-called take-it-or-leave-it contracts that waive or limit consumers' rights and protections. But the Community Home Lenders Association says the new registry isn't necessary because several federal laws already give consumers protections. And the MBA says the CFPB should instead focus on helping lenders lower their costs. But the proposal does have supporters. A group of 10 consumer advocate groups signed off on a letter of support, saying this will help promote transparency in the financial sector. The public comment period ended April 3rd. The CFPB has not set a timeline for a final decision. After the break, many companies are laying off staff, but the country's top lender is going on a hiring spree.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. The top wholesale lender in the country is looking to beef up its staff. United Wholesale Mortgage is hosting an event at its Pontiac, Michigan headquarters, and the company says it could hire as many as 500 people. UWM has cut its staffing by 30% since 2021, down by 2,600 employees. But the company maintains it's been hiring all along, and an executive tells NMP the company's finances are a lot less cyclical than other companies. Other lenders in wholesale have been laying off. Most recently, HomePoint announced it will lay off 350 people as part of a deal to sell its wholesale division to the Loan Store. But UWM has taken over the wholesale channel over the last year, holding a 54% share of wholesale originations in the fourth quarter. Coming up, it seems even the Federal Reserve expects a mild recession this year.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. San Diego to LA to San Francisco. No one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. In the past, Federal Reserve Chairman Jerome Powell has said a soft landing is possible, that rate hikes can bring down inflation without a recession. Well, now it seems even the Fed thinks a recession is likely. Newly released minutes from the most recent Open Market Committee meeting show Fed staff expects a mild recession this year, followed by a recovery over the next 2 years. So what changed? The Fed thinks ongoing volatility in the banking sector will ultimately tilt us into a recession. Powell said after the Fed's March meeting that the committee expects to approve one more rate hike in May before taking a pause. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.